So, Mavryk Finance. There's a bit of a multitude of issues with DeFi in the space today, mostly without sounding too, without the Israeli and me having too much chutzpah, DeFi platforms tend to be one-trick ponies. So what we built essentially is a vertically integrated ecosystem for people to come on board and essentially lend, borrow, passive governance, active governance in a DAO, oracles, and and we utilized a proof of stake model for actually paying for the oracle price feeds. So if you could imagine a world where the the governance model is based on a proof of stake, with the lending and borrowing of peer-to-peer finance, and an integrated but decentralized oracle system to feed data into it. And the reason why we did this is if you go to your bank, you don't just actually go to your bank for one checking account. You'll typically get a checking account, a savings account, a credit card, and perhaps a mortgage. And the bank vertically integrates a lot of those things in the back end. They provide you lending, but they're doing a lot of other stuff that you don't actually have to touch. With DeFi platforms, typically they do one thing and one thing only, which is either self-minted loans, MakerDAO, peer-to-peer lending like Aave or Compound. Chainlink doesn't do DeFi per se, but they provide the data for DeFi. So what we've done is vertically wrap that up into one ecosystem. So, like I said, Maker's got about, forgive these numbers because they change daily in crypto, but Maker's got about $8 billion in TVL. Chainlink's market cap's at about $6.25 billion. Aave's got I think it's actually closer to $10 billion in peer-to-peer lending. And Curve, which is a stablecoin exchange, has about north of $5 billion in pegged assets. So think assets pegged to the dollar, wrapped forms of Bitcoin, wrapped forms of Ethereum, et cetera. And like I said, we do the actual business model behind Mavryk is peer-to-peer lending. So people who have people who have liquidity essentially that want to earn a yield on their assets can go and deposit them into pools. Everything's decentralized, so it's a decentralized pool. And users that want to take a loan against their assets open up a personal vault, non-custodial, just to the user, and that they take a loan based on the collateral, so LTV essentially, based on the collateral they deposited in that vault. Something actually quite unique to Mavryk, which most other lending platforms don't have, is that our vaults are multi-collateral. So if you take out a loan using Ethereum as collateral, and Ethereum's price drops and your loan is at risk of liquidation or foreclosure, you can actually deposit wrapped Bitcoin as well into that same vault to help solidify your position. You don't get a margin call. Our governance model is actually quite unique to Adapt as well. We based it on a proof of stake governance model for L1s. So in a proof of stake protocol, the nodes vote on governance on behalf of the delegates, and they validate transactions for the blockchain. In Mavryk, users don't directly vote themselves. The problem also in a lot of these applications is that everybody wants to own your token, nobody wants to vote. And so when you have a DAO, you end up having problems with actually passing protocol updates, any form of voting, et cetera, because people are just there to own your asset and not to participate. So we have passive and active governance. The passive side, if you just want to hold a token, you stake your tokens, you delegate them out to a node. We call those nodes satellites. They vote on behalf of the users, so you don't have to do it yourself. The nodes, beyond just, so if you see here, beyond just dealing with governance, which is the bottom column, they also sign the price feeds for a decentralized oracle. So all of our data that's being brought on chain is not brought in from a third-party provider where we have counterparty risk, but it's brought in by our own node governance system, and it's decentralized as well. So all the nodes are the ones signing signing the price feeds for the price data of the collateral in our vaults. When that happens, the nodes earn rewards for providing that data. They pay those rewards. Well, they keep their own share, of course, but the earnings that they earn based on the delegates, the voting weight that's delegated to them, they take a small fee and pay those rewards back to their stakeholders, essentially. They're the people who delegate to them. So if you're passive and you stake and delegate your tokens, you earn by the satellite actually working for you. If you're a satellite, you earn from signing price feed transactions and, well, price feeds and the fee that you take from your delegates. So as I said before, the Oracle network is, everything that we're doing here is to keep centralized price manipulations from occurring. So there was, if you have a centralized Oracle that's controlling the price data of our vaults, then someone can manipulate that data. And let's say there's two ways you can actually hack this. Multiple ways, but two main ones. You can say that the price of Bitcoin's gone from $20,000 to $1 and then go liquidate all of the assets that are in those vaults. Everything opens up for foreclosure. Or you can say that Bitcoin's worth 20 million, as what happened with Mango Finance recently with a price manipulation. The hacker who initiated the trade, it's a weird situation, but they basically said that the assets were worth more, and then they basically took out a massive loan and drained the pools of all their funding. So we protect against this by having a decentralized Oracle that's not centrally manipulatable. This is about our public sale for the DAO Treasury. So the proceeds from our public sale go into a DAO-controlled treasury. The treasury has, let's see if I've got another one here. There's actually multiple treasuries. There's a main treasury, and then we have sub-treasuries, all smart contract-based, that have different use cases. So one of them is research and development. Like I said, it's a DAO through and through. So once deployed, code can be given to Mavryk by developer teams around the world that can receive payment from the treasury. Other use cases for the treasury are buying back MVK on the open market and replenishing the Oracle and yield farm pools. So instead of a buyback and burn, we've got a buyback and redistribute to participants. In addition to the same way that an investment bank holds assets on its balance sheet, the DAO can buy other assets and hold them in its treasury. We've got liquidity farming, so essentially yield farming for providing liquidity to the lending pools, along with yield farming for providing liquidity on DEXs. As mentioned before, our vaults are multi-collateral, so we can support assets in one vault from a myriad of different types of platforms. So you've got different crypto native assets, such as SmartLink, QuippySwap tokens. Then you've got wrap tokens. Down the line, we're expanding into real estate-backed tokens. So you'd be able to take real estate from essentially security tokens. If you have, let's say, part of REIT 1 tokens and part of REIT 2 tokens, you can deposit them into one vault and borrow out of that. That requires a compliance layer and a whitelist that is also being built at the moment. But we'll be able to add that into all of our lending models. We're built on Tezos, which means that we're utilizing the proof of stake model from Tezos. So all of the transactions that the oracles, that the satellite nodes sign in order to bring all that price data on chain, we're running a proof of stake validator for Tezos that pays for all of their transactions. So when an oracle signs the price feed, they're getting paid back in their base asset. So if they spend 100 XTZ in fees, they're getting paid back 100 XTZ, and they're not open to any sort of like volatility in their price feeds. Chainlink, the oracles are paying in ETH, but they're being repaid in Link. So essentially, they're open to that price volatility of if ETH collapses in price and Link collapses in price, then they're completely out. With us, they're break even on all their costs, and their profits are in MVK. Eventually, we're going to launch a debit card where you can take a loan on Mavryk and then essentially top up a debit card and go spend that in a store. This is the tokenomic breakdown between founders, team, advisors, private, public. Some of our investors are here as well. We're a portfolio company of DGH, who's our anchor investor. Our roadmap, which during the bear market, we actually built out most of this already. So instead of launching, which is the smartest thing to do, is not launch into an utter collapse of the markets. So we built out our V2 and V3. is our team. We're distributed across the world between Singapore, Paris, and Tel Aviv, with a small team in Kiev. Advisory, our investors and partnerships across the board. Draper Goren Holm, Tezos Israel, Collective Ventures, Atlas, Metavest, Big Brain. That shouldn't have been there. And that's Mavryk.